Good morning, good afternoon, good evening, investors. I'm Taylor Watts from Watch Investing, and today we're doing the usual monthly update where we talk about our portfolio, input our money into our subscriber stock based on the difference in subscribers, and we just give the general portfolio an overlook, take a look at all the different graphs, our weightings, our dividends, and just give it a real good overview each month. So to start off today's video, we're going to go straight into our subscriber stock. So in the last video we had 289 subscribers. Since that last video in May, we now have 293, so we've gained 4 subscribers there. And since we added in a new rule to also put $25 per video we make, we put another 25 in as well. So that'll be $29 for today's we input. Boom, boom. And that is that part of the video done. Yes, we're already at 3.5 shares, which was kind of our goal for this year. Of course, we did add in that new rule of $25 per video, so that was super easy to hit. I guess we could try aim for probably 4.5, maybe even 5 shares by the end of the year, depending on how busy we end up getting. But yeah, Triple M, its dividend has been growing and growing and growing, and since we added in this new rule, the new dividend coming up is actually going to be massive. And yeah, that's in a 1.49 gross dividend per share, which I assume is pretty similar to the last one. Yeah, same as the last one. It's just the massive difference in shares since we added in the new rule. Yeah, because it was kind of a initial input and then a steady increase, and then when we added the new rule it just jumped up and up and up, and that has been super cool. And yeah, other than that, our Apple is almost at 10 shares, which is our goal for the year as well, so just a little bit more to go, probably like $40 in there. AT&T is finally back in the green. It was in the red probably for the last like 6 months since it announced that deal where it's splitting off, and it's fully done that deal now. Now we're back in the green. Yeah, this massive just dip for ages. But yeah, the dividend yield is smashing it, and we just had our dividend in May as well, where it got cut off quite a bit, but it will keep growing now that we've sorted out that deal. Coca-Cola staying roughly where it has been. It's kind of been sitting around the 65 for a month or two, but been growing over the longer term as well, which has been really nice. Colgate kind of still just sitting around this 78 line. It's kind of just been dipping under, dipping over, just really sitting at 78. And I'm fine with that. I get to keep dollar cost averaging when it's on the downs. Yeah, just kind of growing that dividend, especially when they are raising their dividends year on year, which is super nice as well. It really just compounds over time. Fisher & Paykel, we are looking at buying more and more, as it has dropped like 30-40% recently. So it was sitting at 32, 33, and now it's way down at 20. So we've been taking advantage of this dip by just dollar cost averaging down, and we're going to probably keep buying into it, just trying to take advantage of these dividends as well. And yeah, total simple return is negative 28%, so we'll take advantage of that drop, as I still see potential there. Our high yield dividend stock has plunged a wee bit, but that's sweet. That just means the dividend yield is even higher for us, so we'll be taking advantage of that and getting like 20 US cents per share, and we've got 20 shares, so that monthly dividend is just going to get massive. And that's just going to be really nice, as that little bit of extra income. Hallenstein's also had a bit of a plunge as well, just lots of macro stuff due to interest rates and the housing market having a bit of a mare at the moment as well. But that really just gives us more buying opportunity to keep increasing this massive dividend that we love to see. So in December, assuming all things go well, we should be seeing a pretty big dividend there. The S&P 500 has dropped from its high of like 480 down to below 400, so we took advantage of that by averaging down on these wee bits, and we're going to continue doing that as well, as it is still 15% lower than its all-time high, and that's super good as well. Just got lots of different opportunities popping up here and there. Most of these companies in the middle here, we're just averaging in over time. Nothing too special happening apart from the main freight. Don't know if it's here yet, but they are paying a dividend in July, I believe, and it's quite high. It's like 20 to 30% higher than its last one. So it's a super huge dividend difference compared to its last one. NZX just going down and down and down, so we're just averaging into it more and more, and we will continue to do so as that dividend yield actually just becomes quite insane. Yeah, nothing else too much has changed here. We haven't really touched too much here. We've added a little bit into Disney over time, just as it's also going down. Westpac, just doing a little buy here and there, just kind of using it as a higher interest savings account as it is our bank. And yeah, Visa I don't actually think we've done too much with, just a few dollars here and there, just kind of taking advantage of the wee dips. And yeah, Realty Income Corp, just buying it whenever we can, getting all those monthly reinvestments in it as well. But Tesla is our main bad boy, and we've been buying it a lot recently as it has been dropping. And we got a nice buy down here in the mid 600s. Same with down here, we've got heaps of good buys. So our investment is all the way up to $3,000 is since like April we've put in 15, 50, 25, 75, 50, 25. So we've been putting in hundreds into Tesla as it's dropped into here, as you can see. Just in October, in October of last year, so like 8 months ago or something, we've almost doubled what we've put into it recently, which is just super cool, really, just getting real into it. And yeah, a good number to be looking at right now is our top-up goal. We are smashing it, like we're not even through the 6th month and we're way over halfway. So that's going to make it super relaxing to hit that over time. I guess we have to be less and less anal about our investments into the future if my income does drop. So that just makes it super easy and relaxing to hit that goal. Back to our beautiful, colourful graphs. I just recently added this about an hour ago, so I just got the dividend averages per month nice and visible up the top here, just using the numbers there, just to kind of compare the growth, really simple on that front page. And the average dividend per month is at 20.32. It's about to drop when we add in the May numbers, as it was lower than the average. But looking at it on the past, just getting that staircase growing and growing, it's beautiful stuff. May is going to drop it back down to reality, but still way above last year's number, almost double, which is super cool. So we'll get straight into looking at that number. So May's number, smashing out of the park, $11.72. So that brings us to our average dividends received per month, just all time, including those initial investing periods, to $11.45, so smash bang on the average pretty much. Our trailing 6-month average is actually going really high, up to 26.7. That's including May as well. And then our total dividends received over time, smashing it up to $450. And yeah, this dividends per month is just getting bigger and bigger. And then we've also got our trailing 12 months. And we just love to see those numbers getting higher and higher and higher. Looking at our weightings, we've actually finally updated this since March. So that took not too long, just adding the number of shares. Not too much has really changed about the positions. Realty Income Corp made a big move from about here in the 500s all the way up to 700s as it recovered some of its value, and we've invested into it a little bit more in the past. Another notable thing is our S&P 500 holding has passed Hallensteins and Westpac, so it is now in the 3rd position of our market value. So that's just giving us a bit of safety. And soon Triple M will actually pass both of those companies too. So these are our two kind of New Zealand high yield early investments. And Triple M's actually really going to pass this by the end of the year, easy peasy. Tesla, obviously, even though it is down like 40% or something, it is still ticking away at $8,000 of value and still a big part of our portfolio. It has dropped from like 42% weighting to 36%, including all of our investments into it recently. So we've been really just taking advantage of that drop as much as we can. Fisher and Paykel is now our lowest allocation stock. That will probably take over Somerset, but I think these bottom five are going to sit around 300-400 for a little bit. We'll probably bump these two up a bit because I haven't actually touched them in a while, and they have been dropping to quite a bit of a tease of a level of value, really. Definitely going to look into them. And dividend growth, this hasn't changed too much as we only got 5 or 6 dividends for the month of May. But it is always just lovely to look at the green. If we coloured it red, it wouldn't be as nice to look at. Some notable things is Realty Income Corp smashing another big dividend jump here since its last period, here and here, so it's jumping up a bit, and hopefully it'll continue on from that new line. Colgate smashing up another big jump as well, and I think Procter & Gamble also jumping up there as well. Vanguard, the Total Bond Fund, this next dividend in June is actually going to be a lot bigger because I think these are around 40-50 cents US, and I think the next one coming is 71 cents US, so this is going to be over $1, the next one I'm pretty sure, and that is just really, really good to see. One notable thing about May is the really high yield covered call ETF that we have actually paid twice in April, so it actually didn't pay out in May. So those guesses that were around $14-15 would have been correct if this $3.94 was actually paid in May, but it paid both of these in April. So unlucky to those guesses that were up around that level, like Josh McCone and Project Frugal at 15.29 as well. You guys would have been a lot closer than I was if that was properly paid in May, but it wasn't. So it looks like I am the closest for this month at $11.11. Nice, 1111. That total was $11.72, so I was only 61 cents off. And super cool to see me back in the game, as Trish didn't guess this month, so less competition there always makes it easier to win like that. But I do love the optimism of the guesses that are higher. That really does lift up my spirits for the month, especially in these low times. Our little Bundy tab over here has just kind of got some extra information that we don't really need to look at, but it's just basically saying that there's 30 weeks left until the end of the year. If I want to hit my goal, I only need to invest $60 a week, whereas this started at like $120. So we've really just kept a high pace to start off the year, and we really don't need to sustain it unless we want to. We've really been hitting that high pace as the stocks have been crashing. So hopefully if they do start going back up, that will be kind of hand in hand with this lower weekly investment. Our goal of 7 Tesla shares is actually getting quite close. Only about $15 a week to go into there. Shares in Apple, it's pretty much done and dusted, and Triple M. Of course, we will actually just bump that up a bit. We'll put it to 4.25 for now, and $5 a week. No, we do more than that. We go 5 shares, eh? We'll hit it to 5. We'll try to get to 5 shares in Triple M by the end of the year. That'll be our kind of new updated goal. Otherwise, we've got our kind of net worth tracker. So we basically flatlined this month, so we lost $10 in net worth pretty much exactly. And that's actually not too bad, as our stock portfolio dropped $1,050, but we flatlined, so we paid off some debt, we grew our savings and some of our cash positions in our KiwiSaver. So even though the stock market dropped $1,050, because we're still working, paying off some debt and investing more and more, we've actually just flatlined it. This next month is going to be an interesting one because I've got a friend and their partner coming from Aussie to do some hang out in Queenstown, maybe go snowboarding and do some stuff. So that will drop our cash position that we have been saving up for a little bit. But if the stock market does have a good month, then it will be unnoticeable in the short term of things. But just thought I'd let you know what's going on. That is pretty much our portfolio, what's been happening. We'll add in the number into May and get that nice wee bit right there. So that's looking sweet. We can do that. So our dividend average has dropped $2 a month roughly, but it is still above last year, and May is historically one of our lowest months of all time. So that's really not too much of a fuss. I think June and July are going to be actually really impressive for us this year. July was only at $7 last year, and I think it's going to maybe smash over 10. And then July in 2021, I can't remember. No, that didn't have a Hallenstein one, so it actually should still be pretty massive, even though we have changed out of a lot of those New Zealand stocks. I don't know if it'll be as high as 2021, though. I actually don't really have a gauge for June, because lots of it is now those US stocks, and some of our New Zealand ones like Westpac and that don't actually pay there either. So I'm actually really stumped for what the guess should be. I'm going to go with between 2020 and 2021 at about $18. I'll go with that average, $18.60, just to keep things nice and simple. So that will be my guess for June. If you want to have the possibility of a channel shout out or whatever you're up to, leave a guess in the description, in the comments section rather, below, of what you think I'll get in June. If you get closer than me, I'll check out whatever it is that you want me to check out, and that is as simple as that. Our total dividends for 2022 are now smashing it at 93, so we'll be crossing over the $100 mark at halfway, which means we are severely below kind of where we want to be heading if we want to hit our goal of 333. It will be flippin' tough to get to, actually. I think with our kind of April, so our Hallensteins, Westpac kind of months, smashing it in December, that will kind of bump up that overall average that will be lower pretty much every other month. I'm hoping that June and like some of these later months where we're dollar cost averaging into, and the dividend raises from companies coming in, hoping that gets us closer and closer, because we'll be smashing it over this 215 easily, but I don't know how close we're going to get to 333. I think I'd be super happy with 300, but I think that's also going to be a tough goal to hit. It's going to be really interesting to see what happens over the year, especially since I've been investing so much into Tesla as well. The dividends haven't actually been growing as much as we would have normally kind of predicted. Quarter 2 is already above quarter 1, and it's only been 2 of the months, so we've got another month to go, and it will push us possibly, or it should push us easily above quarter 2 of last year. We'd really like to see that, as our dividends were pretty much the same in April, double in May, and they should be kind of sitting around a similar level in June. So we do, as long as we get around our guess, we will be passing that quarter 2 in 2021, and that will just be nice. Passing quarter 4, I don't even think we'll do that in quarter 3 this year, just because that one dividend is so big. We'll definitely be smashing it out in quarter 4 of this year though, and that trend line is just getting steeper and steeper, which is exactly what we're going for. Other than that, that has been our portfolio overview. Lots of our graphs have been finally updated, had some spare time to get that done, and that is basically my financial situation in a nutshell. Really just smashing out those dividends, and Tesla has really just been having a pain. So at its peak in our portfolio back in April was when it was absolutely smashing it. It was 1920 up, and then it dropped to a point where it was negative 200, so that was a 2,100 difference in gains in the portfolio. And you can see as it was dropping, this little grey line of our investments just started spiking up and up and up. Same with this dip here, we started getting up there as well. It'll be really interesting to see where Tesla as a price takes us, because I think they may be doing a stock split into the future, which short term affects the stock price quite a bit. They got their Tesla AI Day. I think it's been pushed to September or October now. They might have an Optimus Prime Tesla bot prototype, which will be pretty exciting and will jumble the stock up or down quite a lot. So those are interesting things to look into the future. They're ramping up those 2 factories in Giga Berlin and Giga Texas. Shanghai is back up and running, trying to get back to where it was before the shutdowns because of their COVID cases. And just a lot's happening in the background of Tesla. Other than that, keep it easy, guys. Take advantage of these macro changes in the market. Get your pennies out there and have fun. Happy investing, and I'll catch you guys next time.